The type of real estate investment partnerships that we use are called group sponsor partnerships. The group is the investor group and the sponsor is the developer, the promoter, or the manager. The investors must be qualified. A qualified investor is one who has $1 million or more in net assets excluding his or her home. These investors are considered by the IRS to be sophisticated enough to make their own investment decisions. Non-qualified investors, or ones with less than $1 million, are not allowed by the IRS to invest in this type of group sponsor partnership. This white paper describes how McConkey Development Company creates and manages commercial real estate partnerships. The sponsor is usually a full-time real estate professional with a track record for successful real estate investing. The sponsor is the managing member of the LLC. Each LLC is specifically created to purchase and operate one property. The managing member has 100% control over the management, financing, operation, leasing, and sale of the property. The group of investors receive cash flow and a lump sum distribution when the property is sold. Our experience is that the longer a property is held, the better it performs. However, the sponsor may decide to sell a property early and move on. Investors can take their cash from the sale or they can roll it over into the next deal, often via a 1031 tax-deferred exchange. The process and structure that we use for group sponsor partnerships is as follows, and this is not a solicitation to buy or invest in properties. Number one, the sponsor negotiates to purchase a property and places it under contract, then conducts the due diligence studies. Number two, the sponsor arranges debt financing from a bank or life insurance company. Number three, the group, which often includes a sponsor, contributes the cash required for the down payment. Number four, our minimum investment level is $50,000, but most of our investors buy $250,000 to $1 million in shares. Generally, the smaller the group, the better. We target 3 to 5 qualified, like-minded investors. As a sponsor, I usually contribute $250,000 in cash equity on the same terms that the investors contribute their capital. Number 5, the returns and distributions are defined in the LLC document. The group usually receives a preferred return until their investment is paid back with interest. After the preferred return is repaid, the LLC splits the remaining cash and/or cash flow distributions on the sale per the terms of the LLC agreement. Number 6, in today's market, preferred returns are in the 4 to 5% range, and group sponsor splits are 75% for the group and 25% for the sponsor, or 75-25. The preferred return and the splits will vary depending on the amount of risk involved. 10-year returns are targeted in the 10 to 12% IRR, or internal rate of return, on a pre-tax basis. The holding time is usually 5 to 10 years. If an investor wants out early, those shares are first offered to the existing investors at the fair market value. Number 8, the sponsor is responsible for property management, financing, leasing, renovating, and selling the property. The sponsor earns predetermined market rate fees, which are spelled out in the LLC document. Number 9, the tax benefits of mortgage interest deduction and depreciation flow through to the group investors and lowers their effective tax rate on the investment. If you're interested in becoming an investor or know someone that is, please give us a call or visit our website.